what are the basic role of the financial executive? So, the role of CFO of the traditional and the current role of the CFO is the totally you can say much more higher. Earlier the objective or the basically role of the CFO is quite different, and the current scenario the role of the financial or CFO is the basically much more. So, basically the financial uh, manager, you can say CFO, responsible for the decision. What are the different decision? Financial analysis and planning. So, determine the proper amount of fund to be get, where the fund is to be get, and the size, it will depend on the size of the firm and growth rate. So, what are the different sources? Either it can be debt, or so it can be equity, or through borrowings. So, different source has to be planned. That is a financial planning decision. Then investment decision, where the amount which is borrowed, that to be allocated to the particular asset. When different asset, financial asset or non-financial asset, that investment decision has to be taken where the return can be maximized. Then planning and capital structure decision means raising the different fund, whether it should be equity, it should be debt, or combination of equity plus debt, which is the maximum return can be optimized. So, cost of capital can be lower. Next, management of financial resources such as working capital decision has to be taken care of. Means inventory should not be blocked. Then risk management. The risk management means SWOT, means strength, weakness, opportunity and threat has to be analyzed. So, if there will be more risk, there will be more return, only take the calculated risk. And if you talk about the CFO of the financial or finance executive has to take care about the two basic functions, treasury functions and the control functions. In treasury function, basically the management of the cash aspect or credit aspect. So, cash manager, you can say credit manager or capital budgeting manager or fundraising manager or portfolio manager, they basically control the different sources of the fund. But these are the sources of the fund, whereas the controlling part is the controlling the finance. So, basically controlling means financial accounting manager or cost accounting manager. Financial accounting manager look at the basically finance aspect, what is the profitability of the profitable concern, what the asset, what is the liability, where the cost accounting basically look after the cost aspect, what is the cost to be incurred for produce or running the services. Then tax manager need to be looked at a different tax, direct tax, indirect tax, that has to be looked after. Means tax planning has to be done, where the data processing manager, internal auditor, audit manager has to look after the different internal aspect of the organization, whether there is a loophole in the company, whether the procedure has to be followed or no. So, basically the two functions of the financial manager. If you talk about the basically what the use of the CFO current and the now. So, basically earlier the CFO role is the budgeting, forecasting, accounting, treasury. These are the functions. Prepare the internal financial reporting stand, or you can say preparation of balance sheet, preparation of profit loss account, and tax filing, different monthly return, weekly return. The return has to be filed and the tax has to be paid. There are different tax, just like TDS, income tax return, and that GST return. The different return has to be filed within the scheduled time, so penalty can be avoided. And tracking the various bill, receivable, bills payable, traveling expenditure need to be controlled. This is the earlier basically the traditional way the CFO has to look after the business, whereas the current CFO role is quite changing, and it's dynamic CFO nowadays. They generally look after all the other traditional functions. In addition to that, they looked after the basically the merger acquisition part of the organization, whether it is a cost benefit analysis of the organization, pricing analysis, whether what prices is to be fixed particular product or services, so that maximum benefit they can get. Then this different decision, what are the different outsourcing decisions need to be taken, whether a core company need to do the outsourcing job. For example, a coal company is there, so basic function of the producing the coal. If they will produce, it will cost per ton will be 2000 or 5,000, where they outsource the cost of production may be reduced to 1,000. And if you talk about the software company, the basic they will outsource the HR functions. So business process outsourcing. Then overseas function IT and overseas HR functions also look after the CFO of the current at present, and the strategy planning also taken by the decision by the CFO. So different tactical and strategy planning that should be taken care. The risk management also they are taking. The risk manager has to take out the different risk of it. What is the market rate? There are different risks also, that financial risks, business risks, operational risks, or you can political risks, or different risk of the business has to be taken care of. That has to be managed by the CFO also. As per the scenario, the role and responsibility of the CFO will be differ earlier and the current. So I hope this video will be helpful for you, what the role and responsibility of the CFO. So thank you very much, friend. If you think this video is valuable, please do share with your friends or relatives. Thank you.